It is 9:34 a.m. Pacific Standard Time. It's the 23rd day of the second month of 2026, and this is episode 1263 of BitcoinAnd. Trump opened his mouth again, said the word. He did. He said the T word. He said tariff, and all hell is breaking loose. If you were not clear on exactly what's going on, Friday, a lot of people were celebrating that in a 6-3 decision or something like that, the Supreme Court struck down the Trump tariffs. And a few hours later, he said, you know what, under Section 122, which is a completely different part of some code that he can access as the executive of the United States, he was going to impose a 10% tariff on everyone, unless they started playing ball. And then he upped it like the next day, or maybe even just hours after he said the Section 122, that he was going to do not 10%, but 15%. And the markets are fucking tanking. So this really brings me to the question, does he want to win the midterms? I'm not sure he cares. At this point, I don't think he cares. I don't think he cares if the Republicans hold on to whatever scant amount of, property they're holding on to in the Senate and the House of Representatives. He's not going anywhere. I mean, he's going to be there until, the elections or whatnot. But governor races are coming up in 2026. House is coming up in 2026. I believe there's some senatorial races that are happening in 2026 2026. So the midterms are right around the corner. The orange man keeps using the word tariff, and every single time he does, everything gets wrecked. Right now, the only thing that is even keeping its head above water seems to be West Texas Intermediate. So again, I posit the question, does he want to win the midterm elections? If he does, then he's going to have to lay off of this crap until after the elections. This is what I don't get. You can simply say, let's wait. Let's make everything red hot for months before the election. Let's get these fires stoked. And then we'll take the House, we'll take more seats, we'll take more seats in the Senate, we'll take more governor chairs. It's going to be great. And then I'll invoke 122. But he didn't do that. Who the hell's on this guy's strategy team anyway? Well, it doesn't really matter. Let's get into all the news that you can use and more with me, your host, David Bennett, here on the BitcoinAnd podcast, where I bring you news about Bitcoin and macro from around the world. Strategy, 100th Bitcoin purchase. Yep. And that didn't help. At least for the Bitcoin world, that definitely started a slide that we saw this weekend, most notably yesterday, where everything seemed fine. Everything seemed fine. And then all of a sudden, Strategy does their tweet where they say, hey, we've bought more Bitcoin. This time they bought 592 Bitcoin for $39.8 million at an average of 67,286 per coin. That could have been okay, but now we're at 64,400. So Michael Saylor gets bent over his chessboard again. We can only hope that at least maybe some of these purchases weren't made Monday, Tuesday, Wednesday, and Thursday, that maybe he took my advice and waited. But even then, it wouldn't have mattered. Because the second that boy opens his mouth, somebody who hates strategy starts selling ass loads of coins. It's the weirdest thing that I've ever seen. It's like a vendetta or something. But that's all I want to say about that, right? Because that's just strategy. They've made their 100th Bitcoin purchase. Maybe we'll get lucky and he'll stop for a little while. But in other news, the state of Missouri advances second attempt to establish state Bitcoin reserve. Micah Zimmerman really gets us banging here from Bitcoin Magazine. House Bill 2080 in Missouri, introduced in January by Representative Ben Keithley, has been referred to the House Commerce Committee, where it awaits a public hearing and a committee vote. The measure would create a Bitcoin strategic reserve fund for the state. It would authorize the treasurer to acquire, hold, and manage Bitcoin under defined statutory guidelines, and the proposal follows the failed 2025 effort, again by Keithley, whose prior bill stalled in committee and did not even reach a floor vote. This year's version arrives with revised committee placement and a more structured custody framework, and under HB 2080, the state treasurer would be permitted to accept gifts, grants, donations, bequests, or devices of Bitcoin from Missouri residents and governmental entities. The bill also authorizes the treasurer to purchase and hold Bitcoin using state funds through the framework, emphasizing voluntary contributions as the primary funding source. Voluntary contributions. No, do not give the state any of your Bitcoin. Okay? You may live in Missouri. You may be a Missourian. You may love that state, born there, raised there, plan to die there, and have your ashes scattered anywhere else. Not anywhere else, but only in the state of Missouri. It won't matter. Don't give the state your Bitcoin, please. Bitcoin acquired for the reserve must be placed in cold storage for a minimum of 5 years from the date that it enters state custody. After that 5-year threshold, the treasurer may sell, transfer, appropriate, or convert the holdings into another cryptocurrency authorized under the bill. The legislation defines Bitcoin as a decentralized digital asset operating on a peer-to-peer network without centralized control. It also codifies cold storage as an offline method of securing private keys in a protected physical environment. By embedding definitions into statute, lawmakers seek to establish a legal foundation for custody and risk management. 2080 requires the treasurer to develop formal custody policies and authorizes the use of qualified independent United States-based third-party entity to assist in securing and administering the reserve. The bill mandates biennial public reporting and oversight procedures designed to provide transparency into the fund's holdings and activity. A separate provision would allow Missouri state agencies, with approval from the Department of Revenue, to accept cryptocurrency for taxes, fees, penalties, and other state obligations. Transaction costs may be borne by the payer. If the Commerce Committee advances the bill, it will move to the full House for debate and vote. Approval there would send it to the Senate for committee review, floor consideration, and final passage. The measure would then proceed to Governor Mike Kehoe for signature or veto. The bill carries a proposed effective date of August 28th, 2026. So there you go. Missouri seems to still be, getting this thing going. It's moving through. It's advancing in the second attempt. At least it didn't stall in committee like the original bill did. Now, Trump is not doing himself any favors with this tariff attack here. His own Trump-linked stablecoin wobbles as WLFI says that it's under a coordinated attack. Did you look inside your own house as to who might be attacking your ass? Christian Sandor out of CoinDesk has this one. USD1. The US dollar stablecoin of World Liberty Financial slipped from its $1 peg on Monday amid what the project's developers describe as a coordinated attack against the protocol. The token fell to as low as $0.994 or 99.4 cents during the day, some 0.6% from its intended $1 anchor. In a Monday X post, the team behind USD1 said multiple co-founder accounts were hacked, influencers were paid to sow doubt, and short positions were opened against the protocol's native token, WLFI, in what they framed as a deliberate effort to stir up panic and profit from it. Quote, "It didn't work," the post said. saying that a redemption mechanism that allows USD1 holders to exchange their tokens for an equal amount of US dollars as the reason the peg held firm. However, the token still traded at $0.998, some 0.2% below its intended $1 price anchor. CoinGecko shows, which gathers price data from exchange pairs. USD1, issued in partnership with crypto custodian BitGo, is among the largest dollar-backed stablecoins. Its value is backed 1-to-1 by short-term U.S. government treasuries, United States dollar deposits, and other cash equivalents, and reports monthly attestations of its reserve signed by consulting firm Crow, according to BitGo. The token currently had a $5 billion market capitalization, but it still trails major players like Tether's USDT. Can't imagine why somebody would want to attack this coin. It's just, it's preposterous to think that anybody would, I don't know, look at a weak shit coin and try to figure out a way to break it. And here's the other thing. The fact that this is Trump's family and that they are so knee deep in backing this coin by United States treasuries, it doesn't matter if I like Trump or not. It is a massive conflict of interest. It just is. And again, unforced error. This is just dumb. Sure, I mean, all is said and done, is Trump going to walk away like a hell of a lot richer from this presidency than he was? Yeah, but honestly, I don't think he wants money anymore. He's got enough. This cat wants power, and he certainly does not want to be made to look like an idiot or bad or be asked a bunch of questions in front of Congress. He's not that kind of guy. He wants his ego stroked pretty much all damn day, and sitting in front of Congress, having to answer questions by, guess who's going to ask them? Bernie Sanders, Elizabeth Warren, and anybody else that Trump already hates. And he's going to have to answer those questions, and he's not going to like it. So my question is, why even pretend like you want to do this? It doesn't make any sense. Yeah. Oh, for the love of God. Okay, let's get to some cooking with my friend GreatGhee at GreatGhee.com. Go to GreatGhee.com, or better yet, go to the show notes for this episode, and you will find my affiliate link so you can buy some GreatGhee, and that will signal GreatGhee that I bought or that I sold some of his product here on the BitcoinAnd's Circle P. Circle P is open for business. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy said goods and services, but you will be buying in Bitcoin, because if you're not selling in Bitcoin, you're not in the Circle P grass-fed A2 ghee cooking fat. What is A2/A2? There's protein in milk, and A2 milk is A2 kind of represents the type of protein configuration. There's other kinds of there's this same type of protein along with a whole bunch of other proteins, but if it's not the A2 protein, then it can cause some digestive issues in people that are sensitive to milk. A2/A2 guarantees that the only protein of this type is going to be the correct type. And that's the milk that he uses to get to the butter that makes the ghee. What is ghee? It's clarified butter. It's clarified butter. It's high heat, stable fat, and it makes food taste amazing. And it's shelf stable. Not only is it high heat stable, it's shelf stable, which means that you don't have to refrigerate it, right? That's one of the great things about ghee. It is how people figured out how to preserve butter. In this case, they're trying to preserve high quality animal fat for cooking. maybe it's a little bit of frying, not deep frying. You don't want to deep fry with this stuff because it's, you've got other things. You can use lard for deep frying or tallow. But this stuff makes food have a depth of taste, an expansive flavor. I've used it. I love it. Get yours at GreatGhee.com. Again, use the affiliate link in the show notes, and that will tell my friend over at GreatGhee that I made the sale for him here. Now, stablecoins set to scoop up $1 trillion in T-bills by 2028, according to Standard Chartered. Decrypt's Vismaya V has this one. A stablecoin issuer or issuers could become one of the largest structural buyers of short-term United States government debt within the next 3 years, according to a new report from international banking group Standard Chartered. Jeff Kendrick, global head of digital assets research, and John Davies, United States rates strategist at Standard Chartered, project that stablecoin market cap will reach $2 trillion by the end of 2028. That's up from roughly $309 billion today. So it would be an amazing rise. That growth alone would generate roughly $0.8 trillion to $1 trillion in incremental demand for United States Treasury bills as issuers hold short-dated government securities as reserves, the analyst said in a note shared with Decrypt. When combined with expected Federal Reserve purchases of $500 billion to $600 billion via reserve management purchases and a similar amount from reinvesting maturing mortgage-backed securities, Kendrick and Davies estimate total new T-bill demand of around $2.2 trillion between now and 2028, pausing to say, if we don't get a handle on our spending here in the United States, we're going to need a lot more purchasing than that. We're going to need $5 trillion. But, quote, our projections suggest USD $0.9 trillion of excess demand for T-bills if their share of outstanding debt is not increased. In other words, T-bills could become too scarce if no action is taken, Kendrick and Davies wrote. The analysts note that one way to offset the imbalance would be to increase T-bill issuance while reducing long-dated bond supply. Quote, shifting USD $0.9 trillion of T-bond supply to T-bills to cover the excess demand would effectively allow 30-year auctions to be suspended for the next 3 years, they wrote. Oh, Jesus. Okay. One of the things that Jerome Powell came into when he took over as Secretary of the Fed was a whole shit ton of short-dated United States treasuries, because Janet Yellen, when she was over at Treasury, she didn't really want to do the whole 30-year, 20-year, 10-year. No, she was doing 5-year, 3-year, 2-year, 1-year bills instead of like long-dated bonds. And that really pushed the yield curve to the short side of this whole thing. And this reads like they're just going to continue doing that. This is how that sounds to me. Continuing. The report notes the Treasury is already watching, as its February quarterly refunding announcement said. It is monitoring SOMA purchases of Treasury bills and growing demand for Treasury bills from the private sector. Stablecoin growth has slowed in recent months amid weaker digital asset markets and adjustments following the passage of the Genius Act last year. Kendrick and Davies described that pause as cyclical rather than structural, maintaining their longer-term $2 trillion market cap forecast. The outlook builds on Kendrick's earlier estimates that roughly $500 billion in deposits could shift from banks into stablecoins by 2028. Some market participants say the macro impact may be limited unless stablecoins reach significant scale. Quote, if stablecoin hold treasuries as reserve, The macro linkage is not fundamentally different from stablecoins holding fiat in the banking system. In both cases, a large pool of private liquidity is choosing a particular form of safe asset, Kevin Lee, chief business officer of Gate, told Decrypt. Quote, the impact on the yield curve and monetary conditions should be marginal unless the scale becomes truly substantial, he added. Lee said a $2 trillion stablecoin market cap, roughly 30% of the $6 to $7 trillion T-bill market, means, quote, even passive reserve allocation can start to matter at the margins. Bill yields, funding conditions, and the Treasury's insurance or issuance mix could become more sensitive to reserve flows, particularly during stress-driven redemptions. Nick Puckrin, it's a great name, Nick Puckrin, co-founder of Coin Bureau and lead market analyst, told Decrypt, the bigger concern is actually liquidity concentration, especially if the stablecoin market does indeed balloon to $2 trillion, warning that issuers could inadvertently amplify market stress by buying T-bills when liquidity is high and selling into a low liquidity environment. Puckrin said redemptions mostly occur on exchanges, meaning issuers aren't under pressure to liquidate assets immediately and that there are buffers in place unless trust in a stablecoin erodes. We'll have to see if trust in stablecoins erodes. All I've seen is more and more and more product market fit and market share going to stablecoin like Tether than I've seen any kind of erosion of that. And I get what they're kind of saying about market conditions could erode that, but it wouldn't erode trust in stablecoins, at least I don't think. Because at this point, nobody really has any money to spend on like anything. That's one of the major issues going on around the world. Sure, governments are printing money hand over fist, but the people that actually have to use it to pay rent or buy food or buy gas or all of the other things that citizenries around the world need to actually purchase, they're not getting the money to do that with. And that's really causing a major issue. At the same time, we've got this whole AI scare going on where people might actually start losing their jobs en masse. And then that's really going to start causing some issues for companies that have products that they need people to buy. But you know what'll happen? A lot of them will just get bailed out by various governments that have their hands on the lever that control the money printer. Our real problem isn't the global economy. Our real problem is the people that run it. Because you can't run an economy. You either have an economy or you don't. You either have a forest or you have a desert. The in-between is burning the forest to the ground, which is what we're seeing right now. These are lousy forest managers, right? An economy is essentially a value ecology. And one of the things that we know that we suck at as humans is managing ecologies. We don't understand enough about the creation that is the universe, much less the intricacies of life here on Earth and how species interact. Well, and no, not just species interacting with each other. I'm talking about like mammals interacting with plants, fungi interacting with mammals, fungi interacting with plants, bacteria interacting with all the rest of it. We don't know enough about it to be functional managers. And we screw things up all the time. All the time we're screwing things up. On what planet did anybody grow up on that thinks that an economy is not just another type of ecology? It is, because it came out of humanity. But it's not just that. There's water economies that were existent in the world long before humans started walking around on their hind legs. There's always an economy. There's always a budget. There's a carbon budget. There's a water budget. There's a nitrogen budget. There's all kinds of budgets. And all of those budgets and ecologies and economies were here long before we had anything to do with it. And yet somehow we've been told that it's government's job, governments staffed by humans, to take control of an economy, which is the same thing as taking control of an ecology. But this one is worldwide. It's like managing, it's like if the earth was pole to pole forest, one single ecology that spanned the entire surface of the planet. And we're going to manage it? No, that's not how this works. In fact, let's run the numbers and see how it's not working. CNBC futures and commodities. Brent North Sea is down a half point to 71.45 a barrel. West Texas Intermediate has now gone out of the green into the red by a third of a point, $66.28 a barrel. Natural gas not acting as a hedge today. It's 1% to the downside, clocking in at $3.01 per thousand. And gasoline is down a quarter of a point, back below $2 to $1.99 a gallon. Murban crude is down 2/3 of a point to $71.60. Metals are mixed. Palladium is down a quarter. Gold is up 2.8% to $5,225 and a dime. Platinum is down 1 1/3, but silver takes the center stage. It's Dakota on the main stage. It's silver 4.95% to the upside, $86.41 for that one. Ag is fully mixed today. The biggest loser is coffee, 2.73% to the downside. Biggest winner is sugar, 0.84% to the upside. Live cattle down 1 1/4. Lean hogs up a quarter. Feeder cattle down 1.19%. Indices are getting wrecked. S&P down 1.1%. The NASDAQ is down 1 1/3. Dow is down 1.58%. That is off by 775 points. S&P Mini is down 2.14%. Orange Man absolutely has to stop saying the word tariff at least until after the freaking midterms, or he's going to lose all the midterms. And again, I'm not sure if he cares. He certainly doesn't care about Bitcoin. $64,740. That is a $1.29 trillion market cap. And now we can only get 12.3 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,993,532.41 of, and fees are nominal. They're the same as they were Friday, 0.02 BTC taken fees on a per block basis. How many blocks are there? There's 5. There were hardly any blocks yesterday. No, it's just we're not the ones. It's the exchanges, and it's not the people that own the exchanges. It's the people that keep their cash and their Bitcoin on exchanges. And it's also the fact that when people sell out of the BlackRock ETF, BlackRock has to sell the Bitcoin to be able to get the person their cash. That's the way those ETFs work. So now, thank God the institutions came in. We're saved, but no, not really. So there's only 5 blocks carrying 17,500 transactions waiting to clear. High priority rates of 2 sats per VByte. Low priority gets you in at 0.6. Mining? Wow, 1.01 zettahashes per second. So we're still in zettahash territory, although the V-shaped recovery seems to have completed. And now we're going back down a little bit, but I hear tell that there's a massive winter storm somewhere in the United States. I think it's in the Northeast. So maybe some miners have shut off up there. Who knows? Who knows? But from asbestos, bless us. That was Friday's episode of BitcoinAnd. Nick Dose with, wow, a fat row of sticks, 11,111 sats, says more boosts. Your work is appreciated. I appreciate that, Nick. That makes me feel much better today. Reverend Hoddle, 1,121 sats, says, if you're like me and listen to BitcoinAnd as the news source as part of the 40 hours per week Zap boost a few sats, I'm trying to make more of an effort to participate in the value for value economy again. Join me. Yeah, the value for value economy really is important. And it needs to get bigger. It doesn't need to have explosive growth because we all understand what explosive growth, what happens. You get explosive contractions too, and that's not good. But slow, month over month, quarter over quarter, year over year growth in the value for value Bitcoin circular economy is necessary. And we are seeing it. We are seeing it. Andrew gave me 10,100 sats. He says, keep going. Thank you. And I hope this makes you happy. Yeah, Andrew, it does. This is an excellent day for me because Jay came in with 8,400 sats. Holy crap, guys. Thank you, Jay. Sly Roundabout Way with 4,200 sats himself says, starting 1 hour, 4 minutes at 1 hour and 4 minutes. Your wide-ranging closing thoughts today are deeply moving. Wisdom, David. Many, many thanks. I appreciate you saying so. Thank you, sir. Noster Gang with a short row of sticks says TY. I guess that means thank you. Jason High with 2,500 sats says, here's a bigger boost than usual. I typically listen while I'm working and don't always have time to stop and boost. I understand that. I really do. That is a friction level event, and there's nothing anybody can do about it. I mean, at least we have boosting available. That takes some of the friction away. Could you imagine trying to, we can't even do this on podcasting 2.0 with fiat dollars or yen or British pound sterling. At least we have Bitcoin, but there's still a friction. How to get over that friction point? I don't know. I don't know what kind of user interface you would need. And I don't want somebody to get their brain chipped so they can have a display of what's going on in their brain, like projected on their eyeball, and then be able to, I don't want that. Would that reduce friction for people? Yeah, it would, because you'd be listening to BitcoinAnd and you'd just be able to look up, to up and to the right, highlight where you can boost, and then think the number and then hit send. I don't want that. There's something to be said about having some friction involved. Because if it was that easy to just send me sats, then these boosts actually wouldn't mean as much. Why? Because all of these people have to stop what they're doing and boost the show. That action alone shows love. I'm just saying, this is like, even a low boost is a boost. You have to drop what you were doing and do the thing. And Nick Dose with 155 says, cheers. And that's it. That is the weather report. Thank you to every one of you who supported Friday's show, who support this podcast. I can't tell you how much that means to me. Again, not just the sats. Getting over that friction and boosting the show means a lot to me. Thank you so much. Welcome to part 2 of the news that you can use. Nakamoto Incorporated has now completed the acquisition of BTC Inc. and UTXO Management. This is written by Nick and Micah Zimmerman out of Bitcoin Magazine, which is owned by BTC Inc., as is the Bitcoin Conference. Nakamoto Incorporated announced today that it has completed its acquisition of BTC Inc. and UTXO Management Group LLC, finalizing the merger agreements previously announced earlier this month. The transaction was structured entirely through the issuance of Nakamoto common stock. BTC Incorporated and UTXO security holders received 364,795 shares of Nakamoto stock at a combined value of $81,632,852 based on Nakamoto's closing price on February the 19th, 2026 at 24.8 United States pennies, a quarter. In a Form 8K filing yesterday, Nakamoto disclosed that the two businesses reported combined revenue of $80.5 million, $34.2 million in EBITDA, earnings before interest, taxes, and amortization, and $40.1 million in net income for the 12-month period ending September 30th, 2025. The deal followed the terms of Nakamoto's call option under its marketing services agreement, which was previously approved by shareholders. BTC Incorporated is a global Bitcoin media company producing Bitcoin Magazine, which is one of the longest running publications covering cryptocurrency industry. The company also organizes the Bitcoin Conference in the US, Asia, Europe, and the Middle East. BTC Incorporated also operates Bitcoin for Corporations, a membership platform for companies using Bitcoin as a treasury asset. UTXO Management serves as an advisor to a hedge fund focused on Bitcoin and related investments. Its team allocates capital across public and private markets in the Bitcoin ecosystem. The firm's integration into Nakamoto expands the company's investment and advisory capabilities. And here we go. Here's the name you need to remember. David Bailey, chairman and CEO of Nakamoto Incorporated, said earlier this week that the acquisition aligns with our plan to operate a portfolio of companies across media, asset management, and advisory services. BTC Incorporated and UTXO provide recurring earnings and institutional capabilities that support our growth strategy, and that is a direct quote. Brandon Green, CEO of BTC Incorporated, added, quote, "Joining Nakamoto allows us to scale our media and event platforms and extend our reach to a wider audience of companies and investors in Bitcoin." Tyler Evans, Chief Investment Officer of Nakamoto and UTXO, said that the combination provides an opportunity to reinforce Bitcoin's role in modern capital markets and to develop new investment strategies. With the acquisition complete, and it is complete, ladies and gentlemen, Nakamoto now operates a diversified portfolio of Bitcoin native enterprises that span media, public events, asset management, and advisory services. The company intends to use the combined platform for future strategic initiatives, including additional Bitcoin accumulation and potential acquisitions. All right, let's get back up here. I don't want to get off this just yet. And I don't want to throw David Bailey completely under the bus, but some things need to be said here. David Bailey was the CEO of BTC Incorporated. Then he went to go work at the White House, right? Some kind of crypto czar or whatever it was. And then at the height, at the very tippy top of the FOMO that is, or at least was, getting in on Bitcoin treasury company stuff, he leaves the White House to form Nakamoto, right? Okay, that's as long as that's clear. No longer the CEO of Bitcoin Incorporated, he left, right? Kind of. Not really. Because what does this all mean? Well, the company that he is now a part of, that took part of the extreme hype that is or was the Bitcoin treasury company, was now able to buy himself out of his position of BTC Incorporated. Now, this was posited by somebody else. I did not formulate this, and it's a theory. All right. I'm just going to keep it as a whole theory. That's why I said I don't want to throw David Bailey completely under the bus here. I'm also not going to say who said it because that would not be kosher. However, it's somebody that I when I was listening to them talk about this to me directly, I said, you know what, that actually makes a lot of sense. You got a media company that is doing okay. You go over to the White House, get yourself some political street cred. You hop over and start Nakamoto and do the whole treasury company thing. And then you go buy out your old companies by printing shares of stock in your new company. And when you buy yourself out of your other companies, if you have any equity in those companies, then you basically used your new company to get yourself out of that position. It's not brilliant, but it's definitely legal and it's done all the time. I don't think it's necessarily ethical, right? I'm not really all that happy with the way this is going down because it looks a little shady. I like I said, I don't want to throw David Bailey completely under the bus. He's done a lot for Bitcoin Magazine. He's done a lot for Bitcoin. He's done a lot for the Bitcoin conference. I get all that, but you start seeing the seamy side of the human condition when you start seeing shit like this, and I don't like it. I don't like it one bit. And you know what you're not going to like is the BitDeer news, which is next. Actually, it's right here. Bitcoin reserves of BitDeer have been wiped out as 943 Bitcoin sold in 1 week. Now, before we get into that, I want you to remember that I think it was like, what was it, Thursday or Friday? I can't remember which show it was. I brought you news that BitDeer stock had crashed 18% when they announced a $300 million convertible note offering, which caused people to get scared of being diluted out of their position, or have their positions at least diluted to the point that they're not holding as much equity as they thought they were holding. That was last week. Over the weekend, BitDeer sold all of their Bitcoin. This is out of Atlas 21. BitDeer Technologies has completely zeroed out of its Bitcoin reserves, reporting 0 BTC on its balance sheet as of February the 20th, 2026, according to the company's weekly update. The NASDAQ-listed miner trading under the ticker BTDR sold 943.1 Bitcoin in residual reserves in a single week, in addition to the 189.8 Bitcoin mined during the exact same period, also entirely liquidated. The figures exclude customer deposits. The complete liquidation marks the endpoint of an 8-week divestment process. BitDeer held approximately 2,000 Bitcoin at the end of 2025, which fell to 1,530 by late January 2026, then to 943.1 on February 13th. And in that preceding week, the company had mined 183.4 Bitcoin and sold 179.9, maintaining a pace broadly in line with production. The sale of the entire remaining reserve in that final week marked a sharp acceleration from the previous trend. The move places BitDeer in an isolated position relative to its main competitors in the public mining sector. According to Bitcoin Treasury's data, Mara Holdings has 53,250 Bitcoin, while Riot Platforms has accumulated around 18,000 Bitcoin. BitDeer thus becomes the largest public miner by self-mining hash rate to hold no Bitcoin on its balance sheet. The liquidation comes just days after BitDeer announced a $325 million convertible note offering and a $43.5 million equity placement, both aimed at funding data center expansion and a transition toward artificial intelligence. In a post on X, the company made a statement. Quote, Our decision to sell Bitcoin should not be a concern for the broader market. We are currently evaluating multiple non-binding powered land acquisition opportunities, and we believe it is prudent to prepare liquidity now. Our hash rate will continue to grow, and we will continue to mine more Bitcoin for the interest of our shareholders. End quote. Well, at least it's not 100% suit speak. They want more land acquisitions. Okay. It's probably, honestly, this doesn't even bug me. It really doesn't. BitDeer, hell, they only ever had, I think I don't know if 2000 was their maximum, but for as far as I can tell in 2025, 2000 Bitcoin was BitDeer's maximum. They're not that big of a miner. They're not like Mara Holdings. Yeah, right. They're not like Riot Platforms. So it doesn't surprise me that they are getting their hands on all the cash that they can possibly get their hands on to do whatever it is they're going to do, because this coincides with this $325 million note offering. And it was 300, but they said, if it gets oversubscribed, we'll offer another 25 million. My question is always going to be, how much of those notes do they actually sell? Because I'm kind of looking at the landscape thinking that this whole senior convertible note or senior preferred convertible note, whatever it is you want to call it, that whole thing is kind of cooled off a little bit. So next thing I hear as to, if they've raised the money through this convertible note deal, I will make sure that you know. But in the meantime, let's go to Revolut, who has confirmed that one of their employees or ex-employees had threatened to leak know your customer data for crypto ransom. This is out of Cointelegraph. A cryptocurrency trader said a former Revolut employee tried to extort him by threatening to publish his personal information unless he paid a ransom, an allegation that Revolut has confirmed that it reported to law enforcement. The trader, who posts under the name Trader SZ, wrote in a Thursday post on X that the former employee threatened to disclose his identity and private details and also contacted members of his family. Trader SZ said relatives who used Revolut received messages seeking to pressure him into paying. Quote, they looked up my details and found my other family members who used Revolut and contacted them to force to pay up or be blackmailed. End quote. Good mercy. Trader SZ posted screenshots. He said show exchanges with Revolut's customer support regarding the incident. Cointelegraph contacted Trader SZ for additional details, including what specific information was accessed and whether a formal complaint had been filed, but did not immediately receive a response. A Revolut spokesperson confirmed that the company has reported this particular matter to law enforcement and that authorities are investigating the alleged conduct of a former employee. Quote, this matter relates to the unlawful and criminal actions of a third party who is a former employee. Following a review of the incident, we have confirmed that Revolut's security systems and data protection protocols operated as intended, and there was no procedural breach, end quote. The spokesperson then said Revolut is in communication with the affected customer. Revolut is a British fintech company that reached a $75 billion valuation November 2025. The platform offers a mobile banking app that surpassed 65 million global users. 65 million users in September 2025. And this one guy is reached out to and is held ransom on his KYC information that Revolut themselves said was not due to a data breach, which means that their internal security needs to be looked at, not just their external shit. Who gets to look at the KYC data? Have they been vetted? Are they bonded? And you may ask, what is a bond? If I'm a locksmith and I am not bonded, the chances of me getting a lot of locksmith jobs are much less than a locksmith who's been bonded. So what does it mean? It means I put up like $5,000, $10,000 in an escrow account to get myself bonded. The money doesn't ever leave. See, I cannot use that money. The money cannot be used to create interest. It's literally in a non-interest bearing account known as escrow until I decide that I don't want to be bonded anymore, or I stop being a locksmith or whatever. Because that bond is there to prove that if I screw you over, I stand to lose $10,000 minimum. Just because I used my ability to be a locksmith to unlock your front door and go and steal your shit, and somehow or another, maybe I don't know, dropped my business card inside the jewelry case that I took all your wife's jewelry from, whatever, and they catch me, and it's beyond a shadow of a doubt that I did the deed. I lose that $10,000 immediately. That bond is gone, and I'm never getting it back. That's what bonded means. So, was this guy, or is the team of people at any of these companies that take your AML KYC information, do they at least have bonds that when shit like this occurs, even after they leave the company, like literally bonded forever, right? That they would lose that $10,000. And see, and that's the thing. I don't know. It's like, if I stop being a locksmith, can I debond myself? I don't even know that part. I don't know. I don't know if a bond is forever or not, because once you learn how to be a locksmith and you have the tools, you can always pick a lock. Once you know somebody's KYC or a whole bunch of people's KYC information, you have that information for as long as that information is intact. In other words, until that person moves from their address, then the address information of KYC is no longer applicable, but they may still have the same phone number, email, social security. Well, they're definitely going to have the same social security number. I mean, you're kind of screwed for life here. This is why KYC AML is so bad. You don't want this shit. You do not want this at all. Please, please, please be very, very careful as to who you're going to do business with, because at 65 million? Where was it? It was somewhere around here. How many customers that they had? It was right here. Hold on. No. It's not. It's no longer here for some reason. I don't know why. 65 million global users in September of 2025. And they all are KYC'd. 65 million people. Revolut's got a major, major internal security issue on their hands. But let's go to Russia, where 5, not 1, not 2, not 3, not 4, but 5 crypto exchanges allegedly are circumventing international sanctions. Well, duh. From Atlas21.com. Blockchain analytics firm Elliptic published a report on Saturday identifying 5 cryptocurrency exchanges that are allegedly helping Russian entities evade international sanctions, filling the void left by the shutdown of Russian exchange Garantex, whose website was taken down by authorities in March of 2025 after being heavily sanctioned in mid-2022. According to Elliptic, these exchanges enable the conversion of Russian rubles into cryptocurrencies, which can then be transferred across borders without going through an intermediary and converted into another fiat currency. Quote, despite increasing regulatory pressure, many of these exchanges, some with nominal registrations outside of Russia, continue to facilitate high volumes of crypto asset trading linked to sanctioned entities, the report reads. Among the exchanges analyzed, BitPapa is the only one already formally sanctioned. The U.S. Treasury's OFAC designated it in March 2024 for supporting sanctions evasion, Elliptic found that approximately 9.7% of crypto funds leaving BitPapa are destined for OFAC-sanctioned entities, and that the exchange manages its wallet specifically to evade sanctions enforcement, constantly rotating addresses, end quote. And then they talk about a couple of different ones, but the most significant case flagged by Elliptic involves XMO. Despite the exchange having claimed to have exited Russia completely following the invasion of Ukraine, transferring its business to XMO.me, Elliptic states that XMO.com and XMO.me, quote, continue to share the same custodial wallet infrastructure. That allows the commingling of funds between the platform serving the Russian market and the one serving Russian or Western markets. The two entities are said to have conducted over $19.5 million in direct transactions with sanctioned entities. Rapira, which is another exchange headquartered in Georgia but with an office in Moscow, allegedly carried out over $72 million in direct transactions with Greenix, the sanctioned successor to Garantex. The final exchange in the report, Alfree Pro, or AI4E Pro, I don't know how to pronounce that, operates across Moscow, Dubai, and Turkey, and explicitly facilitates the circumvention of service restrictions by offering virtual USDT payment cards to access foreign services that are blocked in Russia. The context is made even more significant by data published by Chainalysis last month that says sanctions are said to have driven the total value of cryptocurrencies received by illicit addresses in 2025 to $154 billion, the highest level ever recorded, due to unprecedented volumes associated with nation states. So Russia basically just, thumbing their nose at sanctions all over the world. All right, so there it is. We're all good now, I guess. Trump needs to stop saying the word tariff. And we're going to have to deal with fallout until he does. And fallout is what we're seeing. The Dow has recovered slightly. It's only down 616 points right now. But hey, it is what it is. These markets are fragile as crystal, right? So anything, any shaking, it's like baking a cake and your mom tells you, don't slam any doors. Yeah, we don't want to slam any doors around these markets, man. They are fragile as shit. And here we have Orange Man, the one that basically has been around these markets for his entire life, saying words that he knows is going to make the cake fall. Why? If you have a theory as to why, because you know the ramifications, people want to be able to look at the stock market and feel good about their future. When they don't feel good about their future, they're going to vote for the other side. This is just fact, at least in the United States. We'll just keep it here at home. So why even play this way? What possible purpose could it serve? If you have a theory, I want to hear it. I'm serious. I really, really want to hear the theory as to why it is Orange Man would be saying these things so close to midterm elections. They're right around the corner, when he knows that he can lose all of those, lose all of his ability to affect anything that he wants. Except at this point, I guess he could just do it by executive order. I don't know. It's just bizarre watching this whole thing, right? It's just this whole timeline is bizarre. But if you got a theory, I want to hear it. Tell me about it. Give me a boost. Get a hold of me on Nostr, however you want to do it, and I will see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.